What exactly are we talking about when we're talking about international tax, and why is it important?
Okay, thanks, Oisin. I guess business is increasingly global, so it involves the provision of products or services cross-border. So international tax, in its simplest, deals with the taxation of those transactions. So consider a situation where the company sells a product from country A to a customer in country B, or more complicated, sells from company A a partly completed product into country B, where it gets completed and then sold into country C. So clearly there is a myriad of different supply chains and situations that global businesses will interact. Many with related parties, with third parties, and a mix of that. So international tax is essentially around helping companies understand what the tax profile is of those international transactions. So what tax needs to be paid on profits arising in those transactions in each of the countries along the supply chain. Who needs to pay that tax? Who has to make tax filings, and so on and so forth. And ultimately, tax is just another cost of doing business. So in terms of driving shareholder value, companies in general will want to drive tax efficiency into their supply chain. So pay as little tax as possible, but clearly being compliant, hugely important in the current environment, to be seen to be compliant, to be seen to be paying the right taxes in the right location, and of course on time. Generally, many jurisdictions will have very significant penalties for misfiling of taxes or for late filing of taxes. So international tax, in summary, is helping companies assess what the tax obligations are of cross-border transactions and looking to drive efficiency and compliance into that process.